All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. Glad to be with you this morning. It is Wednesday, October 18th, 2023. More chop, more things to talk about, right? Glad to be with you this morning. Thanks for being with me again. If you haven't already, make sure to hit the notifications button, subscribe to our channel so you don't miss any of our videos. We also do a video over the weekend that recaps the whole week and previewing the next week and talking about our trades. Let's go ahead and get started. Dow futures down about 88 points this morning. NASDAQ down about 109. S&P down about 23. And the Russell, after a nice day yesterday, down about 0.79%. So we kind of had this yesterday, if you guys remember. Stocks were red. And then right on Tuesday, right as we opened, we bounced right at the 10 o'clock hour. We had that nice sword drop. So could we be setting ourselves up for another move like that? Possibly. I mean, you could see Monday overnight, same kind of deal. Slowing down, pulling back. Seems like we'll just sell it overnight and then the Americans buy it. That's what it looks like, at least on the future side. Dollar index 106.34. That's elevated this morning. 18.55 for the VIX, up 3.75%. 10-year Treasury yields elevated as well, 4.862. The 2-year hit its 2006 highs in terms of yield. So what we've been having here in terms of the stock market is really just everything thrown at it. Retail sales were too good. That's inflationary. So throw in more fear of rate hikes. More Middle Eastern headlines in terms of the conflict between Israel and Palestine and for Gaza. Throw that in there. We still don't have a Speaker of the House. Throw that in there. Pretty resilient little market right now. So many bad things are being priced in. But yet we still don't break. Take a look here at the S&P 500, 43.67. We talked about that 200-day. Just stay above it in terms of October, and I think we're going to be okay. But man, pretty resilient. I mean, still above the 20-day. You know, that's still pretty nice. The only problem is that you got lower highs and lower lows. So the question is, how low can we go? How long can we hold this up? That's really the question. And at least for the time being, some solace is that you see this shaded area. That's been our kind of support zone that we drew. Excuse me. Let's take a look at the daily. And you can see that's kind of been our support zone that we've been hanging out. Yes, we've had a deviation below. Yes, we've had a deviation up top twice. So the question is, does this hold as we have this trend line here and we have the 20-day? But so far, so good. You just kind of have to hold on. Little engine that could. So there we go. Real quick questions. Foreclosures are up? Yeah. Foreclosures are up, but again, in comparison to the financial crisis, I was reading a chart regarding it. It's nowhere near those numbers. Now, again, that's something important, obviously, but it's nowhere near to the point where we were in terms of pre-financial crisis either, at least from what I saw. So a lot of people have mortgages that are below 4%. I think that number is right around 60-something%. A lot of homeowners that are older have a paid off home. So we saw the mortgage applications lowest since 1997 or 1996. I mean, kind of hard to sell an 8% mortgage to somebody, especially with elevated house prices. So we're at a point in real estate we just don't have enough inventory and rates are just too high. I know there's a lot of people who say, you know, you buy the home, you marry the home, you date the rate. That's kind of the saying from real estate agents, where, you know, you could always refinance later. The exception of that is that you definitely need to have equity to do so. This is kind of the same playbook of 2007 where people took those teaser rates. We're a little more regulated now in terms of mortgage financing and MBS. So there's a lot of preparation out there. Again, if everyone is expecting the world to end and people prepare and something bad happens, doesn't that prevent the world ending? That's how I would think anyways. Giacomo says, hello, Carlos from Italy. We're still waiting for you to visit. Yes, absolutely. Once we start getting that push and everyone's feeling real good and we got some great trades under our belt, I'll definitely reward myself with a trip to Italy. Dollar strength, let's take a look at it this morning. I know we didn't finish around the horn. You could see here that key level, guys. It's right at 105.90, 106, still sitting above, kind of knocking on the door. We're right at the 20-day. Kind of the S&P being above too. So again, I still expect November and December to get us back down a little bit. Maybe we break below the 105 level, that's the 50, and kind of hung around the 200 and the 100 in November. and December with maybe a Santa rally, we'll get to 102.57. Fingers crossed. That's really the expectation. Let's go over gold. Yes, we are up on gold. Did a gold trade. Let's take a look at the daily, and you could see here above that 1950 level, and that's the level I talked about here on the morning note many times. Remember, look how bad gold fell, and again, we still have a gap to fill here at 1853, so there's some risk there. But my target here is right around 1978 to around 1985. Get to 1970, you move the stop. I think we're in at 1950, 52 maybe. And again, if we can get above to 1970, and that's 9 points away, or 90 handles, let's just say. I think it was 990. So that's what we're looking for, is a little more of a bump to 1968, 1970. We'll move the stop, and if the dollar continues to roll over, or if it does, that's where gold gets to around 2000. And you have a couple of things that you're mixing in here. Again, Middle East conflict, gold starts to get bid. No Speaker of the House, kind of uncertainty in politics, gold gets bid. If you're thinking there's a recession or interest rates continue to rise, gold might be, again, the hedge moment where you start seeing some bids, some inflows into the shiny metal. All we're trying to do is catch the wave. IWM had a nice day yesterday. Let's take a look at this. Holding on to that trend line. I mean, broke it. Don't get me wrong, broke it. But again, still kind of hovering. You're above the 20 as well. You have a gap to fill at 179.82. We need something to kind of push this market a little bit. We're at a point of inflection, kind of right in the middle, kind of at neutral. You have Tesla and Netflix reporting earnings today. That'll kick off the tech earnings as we get into next week as well, and the rest of the month. How big are those two earnings reports? Tesla kind of worries me because they are discretionary consumer discretionary sector, meaning you don't need it to survive, right? I mean, Apple phones, everyone, I can't say needs an Apple phone, but no, not everyone needs an EV either. So prices have been cut. We know production numbers have come in, delivery numbers came in as well recently in the beginning of the month. Kind of the expectation for Tesla is possibly a little bit weaker, maybe a weaker guide. Could Elon Musk blow it out of the water and give us an NVIDIA type move, jumpstart us into November? Very possibly. If there's a name that could do it, it's definitely Tesla. I could tell you this, when NVIDIA reported earnings and we had that big boost in March, I had no idea we would get that kind of rise. I thought we would pull back. That's the market for you. And you have Tesla right here, one gap up, one gap down. You're right in the middle. If we drew a Fibonacci retracement line just from the top and bottom of the most recent moves, more than likely we're probably right around 50%, and I'm right around 50%. As neutral as it gets, guys. That's where we are on Tesla. So I would not trade this name ahead of the earnings unless you think you know something ahead of time. And even at that, I wouldn't do it. Again, if you're just trying to do a lotto, again, maybe QQQ may be the best bet because Tesla's in it. And then you have exposure of other tech. But I mean, it seems like you're just playing the slots right now with Tesla. So you're just going to have to wait. Netflix also reports after the bell. Let's take a look at that. And here's the gap fill that the whole world is watching. I know I am. And we still have the 200-day at 374. Technicals would tell us that we're going to fill this gap at 341. How expensive are those options? I don't have a price on them. I want to say they're from yesterday. So let's take a look at those puts. I want to say they were the 340s. Yeah, $8 bucks. $8 for the 340 puts. They're just too expensive for us to trade because the implied volatility is high because we know we're going to have some kind of move in Netflix. Market makers move due to price and demand. So keep an eye on Netflix. I know I will, and Tesla as well will report those earnings. How do you feel? Oh yeah, one more thing about IWM. Didn't want to go ahead and just move away from it. Again, we're still holding that trend line, and IWM had a nice day. We're starting to see market breadth expand. Apple's not adding a lot of value to the S&P. NVIDIA isn't either. That pulled back on some headlines. Amazon, Microsoft kind of treading water. I'm in long in those. But yet the market is still kind of boosting. Dow was green yesterday. Dow, S&P was flat. I mean, even with all the bad news thrown at it, even with that retail sales, which could show possible more inflation, maybe more rate hikes, this market has been resilient. I mean, how negative sentiment can you go? Very much reminds me of October of last year. And most bear markets or most pullbacks or drawdowns end in October. So it doesn't mean it has to. We'll just see historically speaking, if the pattern does continue. But IWM is looking pretty bottom-ish to me, if I may be honest. Remember, financials were pretty ugly. Let's see XLF. You know, not the best looking in terms of the banks. We know JPM is the heaviest weighted. That's still above the 20. You're above that trend line too. I mean, if we go to the weekly on XLF, boy, that's a pretty good hockey save, wouldn't you say? The 200 weekly MA, very similar to the 200 weekly MA that we had last year on S&P, and it just keeps holding it. Yes, we had a deviation again from COVID, but you could see that it's pretty much good support. Looks like the banks are starting to catch a little bit. Bank of America reported, JPM reported, Morgan Stanley reported. I believe they're down slightly this morning. Yeah, they're down. And that's a company that has been on fire, that has been lapping the field in terms of investment banking if your name is not JP Morgan. Morgan Stanley has done very well relative to their nearest competitor, which is Goldman Sachs. So seeing the banks kind of bottom, seeing IWM catch some bids is actually a very good thing. Seeing the tech kind of rotation out is also a pretty good thing. You can't have the Magnificent Eight, the same names carry the market forever. It just doesn't, it's not sustainable. So if we start seeing IWM, you start seeing the banks, materials yesterday caught some bids, that's a good sign of expansion of buying, not just the same mega cap tech, which everyone kind of implies that it's a safe bet in this kind of time, since they're so cash intensive in terms of how much they have in their balance sheet. How do you feel about AMD? AMD puts at 104 or 103. Let's take a look. We're going to go to the daily here. And you could see this downward trend line. We hit our head right on the 100 and we rejected, but you're still above the 20. So a kind of a difficult place to go. I have 96.51 as a breakdown. That's clearly below the 200-day. So let's go ahead and move that to the 200-day. And again, if that breaks, you're taking a look at 90 to 92 in terms of puts. I think you had it where 104, 103. I guess you're looking a little closer term, short term. Let's take a look at the hourly. Yeah, it's just that you have some support here at that 200. Again, nice rejection of that trend line. Let's take a look at a little more of expanded view in terms of AMD. You kind of have a double top possibly. You could be setting yourself up for something called a cup and handle though. And a lot of NASDAQ names, a lot of tech names have this very similar pattern. You could see it. See that cup? Whoop. And then you have a handle. This might be setting up for upside. So I think you have what 104, 103 puts is what you're looking for. Again, this is on the weekly. Kind of gives us a little bit of an expansion. You got to get above 111.31 if you want that cup and handle to go. Then you're taking a look at 122 to 130 by the end of the year. Absolutely, if you get that cup and handle. Granted, this is the weekly chart, so again, it may take a little bit longer to get to above 130, but that right there, that is your resistance, and right here shorting it, to me, just isn't the best move right now unless we start getting a pullback in terms of NASDAQ in general and semiconductors lead the way down, like NVIDIA did yesterday. But I would wait for that break of the 200-day just to confirm. If not, I just don't want to get chopped. And to be completely honest with you guys, it has been just a very choppy week this week. And we're playing it pretty close to the chest, you know, just watching everything as we go. We got a gold long moving. I have Microsoft and Amazon going. Microsoft hit 32% on Monday. I didn't close. Some of you guys did. Amazon hit 20%. I didn't close. Some of you guys did. Very similar to that Google trade we had 2 weeks ago, where I closed a little too early. I got a little spooked. And what happened? Friday, we moved higher on a catalyst, which was the non-farm payroll report. Guess what we have on Friday? OPEX. So again, we do have the options expiry week. So maybe we get some volatility as well on Friday. Do they make it a good Friday for us? We will see. The goal is to get it beforehand, obviously. So we'll see how the market goes. Right now, we're starting to bounce off the lows. We'll see how we open and take it really, hour by hour, minute by minute, because that's really how we live. That's how we do it. What are your thoughts on Tesla earnings today? Listen, the way I see Tesla earnings is how I see a roulette wheel. Yes, we do have our favorite numbers or our favorite colors, but it doesn't mean we have any idea of what to expect. And like I said, if we just base it just on the Fibonacci levels, top to bottom, literally the last couple of months, You know, your top is 299.15, your low is 212.40. You're right at the 50%. I mean, you're at that inflection point, left or right, either way. You have arguments for more downside. Of course, consumer discretionary, prices are going down, demand's going down. Tesla goes, fills that gap to 220. Or Tesla knocks it out of the park again, takes more market share in China, takes market share in Germany because they have the gigafactory there. They talk more about the Mexico gigafactory. Again, who knows? Maybe they say the Cybertruck is out this year. Elon, who knows? And then this stock jumps up to 290 to fill that gap. So, you know, both arguments are pretty good. I mean, some people would say this in regards to sports. It's a pick'em. It's a pick'em. There is no spread. It's either one. One of them is going to win. Or, you know, if you're looking at roulette, for example, the green double zeros, that's basically would be flat. You know, unchanged tomorrow. That would hurt a lot of traders and not much stock owners, but traders, yes. If you're buying puts or calls, because remember, that IV is extremely juiced both ways. So if you're looking at getting the 240 puts for this week, you're looking at, you know, $2.20 based on yesterday's pricing. And if you were looking like the 270s, you're looking at $2. Not as bad as Netflix. Netflix has a higher implied IV, I assume, based on what we just saw in terms of the options chain. But that's what we got right now, just right in the middle, guys. I'm just going to keep it real with y'all. There is no edge here. There's no edge on Tesla. I don't have insider information on Tesla. It's basically a crapshoot. If you want to gamble and roll the dice, be my guest, but I'm definitely not going to. Crude oil up 1.5%. We talked about gold up 1.30%. Silver futures are up 1%. Copper. So, you know, this is what kind of the trade that we get when you have high inflation for some time or higher yields. You start getting commodities go a little higher, even with the dollar going higher. Euro dollar down 16 pips, 105.59. Dollar again, 149.73. Getting close to that 150 intervention level by the Bank of Japan. That's the expectation. I can see why a lot of traders, Forex traders, do not want to go long as we hit our head into that 150 level. The last time we tagged it, we rejected. 121.85 on the pound dollar, that's pretty flat. Bitcoin futures 28,440, down 0.63%. You know, for all the talk of NFTs being worthless and asset prices going down, Rolex watches going down, sneaker prices going down, everything's going down. Bitcoin has been kind of, you know, for this magical internet coin that people like to criticize. Man, has that been steady? Yes, you have all coins that have taken a hit. Those are just high betas. But Bitcoin, pretty steady. We've been kind of stuck at 30, 32, 28. You would think meltdown, Bitcoin, who cares, sell it. Nope, it's the little engine that could. It's just been chugging along, chugging along. And when you have assets that are, you know, that are supposed to be high volatility assets, and you don't have an economic backdrop that everyone is extremely pessimistic. Remember, we're in a fear gauge. The fear gauge, you know, we have the extreme fear, the fear, neutral, greedy, very greedy, or extreme greed. We're in the fear gauge, like really in that far other side. You know, we have conflict in the Middle East, we have conflict in Ukraine, we have interest rates are at multi-year highs, everyone's upset, and the market just kind of chugs along. So what would happen, guys, if we actually had some good news? What if there is a peace deal in the Middle East today? What if there's a peace deal in Ukraine tomorrow? What happens? We don't know. What if the Fed just actually throws their head up and says, we're good. We're not going to raise anymore. Rates are going to come down. I know it feels kind of like, damn, hey, nothing going right, right? Like just the dog days of October. It was the same October last year. That's just the reality of it. October's can be, you know, the Halloween type month where it's a little spooky, you know, to say the least. No pun intended. But again, for what we're doing today, it's really just watching, observing, and you know, taking the cracks when we can. But as of right now, it just seems that the market, not that it's uneasy, just directionless. Directionless. When you have the S&P flat yesterday, that's what you get. And the equal weight S&P RSP was actually green. Small caps were green. So you can get a little more banks getting some love, a little more of the small caps getting some love. Then we can start seeing if we really have carved the bottom here on the S&P and the broader market. But it's going to take time, and the worst part is the waiting. You know, trading is waiting, and waiting is the hardest part. That's a fact. we'll go and leave it there, guys. Have a great rest of your morning, and I will see you guys on the market blog on our Discord. And if you are interested in joining that, make sure to hit the description below and click on our website and join the free plan. Glad to have you on board. Have a great rest of your day. I will see you guys tomorrow for the next note. Cheers.